Hey, Mortgage Coach community, Dave Savage here. Today I'm interviewing a manager, a leader, Jasen Nuetzmann in the Seattle marketplace. How you doing, buddy?
Good, man. How are you?
I'm doing good. So I want to frame this as an interview for managers, whether you're a branch manager, whether you're a regional, whether you're a head of production. I also think this would be valuable for any individual loan officers to just self-manage yourself and the people that you influence. But we're in an era now, called I call it the digital shift era. But part of what's happening right now, and it's going to happen for years to come, is we're going to have price compression, and all production is not profitable. All loan officers are not as profitable as others, and some of it's technology that they use, some of it's sales practices that they have, but there are best practices that deliver a more profitable production. And so with that said, Jasen, you've used Mortgage Coach as a user, you've managed it at a branch level, and then now you manage it at more of a regional / channel level. Why don't you tell a little bit about yourself, and then let's get into some best practices. And I also know you did some analysis, so let's talk through it.
Yeah, you bet. Thanks, Dave. So I've used Mortgage Coach for, it's got to be 12 years now, I think, going way back. It was a huge part of my practice when I was in production exclusively. And as I've moved into a leadership role, while my personal production has necessarily dwindled, I've really tried to champion the software with my sales team for a host of reasons. I mean, obviously, for all the obvious reasons from an originator standpoint, to provide a value proposition to the consumer and to provide advice rather than price, and really educate. All of that stuff we all know. From a leadership standpoint, it has really proved impactful in helping us to control the rate conversation. And in a tough competitive environment like we're in right now, when it comes to margin compression and too many people scrapping over too few deals and getting hyper aggressive, every basis point counts. And so I really dug into my high users of Mortgage Coach, the power users, and how it affects their bottom line for us as an organization. And those numbers are pretty remarkable. And I've done this a couple of times. The numbers have stayed pretty consistent. So I have a high level of confidence in the result, and I'd love to dig in and share some of that.
All right, so let's do this, guys. So one, I want you to know I've interviewed Jasen a few times, and in my mortgage strategies playlist, it's number 14, and it was how to create urgency with buyers who think values are going to go down. And Jasen was using Mortgage Coach to say, hey, it still makes sense to buy. So I'm going to put a link down below. I've also interviewed other branch managers on how to manage Mortgage Coach and drive adoption in a way that drives profitability. So you're watching this right now. There'll be links down below in the description. Jasen, why don't you share your screen, pull up your slides, and this is an analysis that Jasen's done to really improve how his loan officers and his region use Mortgage Coach, and then to inspire others. So
the right screen there, Dave?
It's not, but yep, I'll tell you when I see the right screen. But it is a gorgeous picture that tells us how to travel to cool places.
For some reason, when I launched the slideshow, it's flipping it onto my other monitor, so I'm just going to leave it in this format.
Yeah, and I see it.
Perfect. So sorry for the not having the full screen effect, but I think we'll get the point here. So what I did is I started off and took a 5 loan officer sample size of my various producers that are heavy users of Mortgage Coach. And I actually got a usage report from you guys, and these were the top 5 that I have for TCAs, okay? So I ran those, I looked at their pricing concessions over 2018, and they averaged 9.9 basis points in pricing concessions during the year. I then tried to find a separate representative group that was not, they were not high adopters, and they may use it incrementally or sporadically, but I wanted a similar volume pool with a similar number of producers and look at their pricing concession needs. And so that's the second group there, and you can see you've got 18.16 basis points there as opposed to 9.9 for the Mortgage Coach users. That's an 8.2 basis point spread in the usage of pricing concessions for the folks that aren't using the software. And that may not sound like a lot, but when you do the math, that's a big number. In this case, just these two groups, it was about $56,000 spread on that portion of volume for the ones that use it and the ones that don't. And when we're doing everything and anything we can right now to be competitive and sharpen our pencil, we need to pick up every basis point we can. And so this to me was a huge light bulb moment.
No doubt. And one of the things that got me excited about doing this interview with you is, this is what you did for 2018, but from what you told me, you've done this same analysis in the previous year, and it delivered, a similar, if not same result. If you could just speak to that.
Yeah, again, anytime you do a sample like this, there's the error that you're getting small sample size, and it's just you're getting outlier data that's not reliable. I did the exact same analysis about a year previous, and it was just over 9 basis points. So that tells me I think I've got enough of a sample here to have some confidence in the outcome that this is a real deal, that people that consistently push a TCA to their consumer do not compete on price, period, as much as those that don't.
Yeah, and remember, it's not just, like you're going to get shopped, but you could avoid the shopping. And then when you do use total cost analysis, especially if you watch the interview that Jasen and I did down below, you'll see that you're in a better position to have a conversation. So if you do need to make an exception to win the business, you can make a fractional exception and not, just like drop to match, but drop in a way that honors the value you bring. At the end of the day, in today's market, if you want to optimize profits and optimize conversion and production, loan officers need to deliver advice. And it can't just be a tagline, a phrase, I'm a mortgage planner. It has to be a tangible advice experience. So it looks like you have another slide to show.
I wanted to just give a quick idea for maybe a standard branch. If you're running a branch or if you're running a region, what the potential impact of getting 100% adoption within your sales force of pushing a TCA on every transaction, right? So that's a high watermark to reach, but let's just shoot for it anyway. A $3 million a month branch could save about $30,000 a year on their P&L just by having their loan officers use TCAs on every transaction. And you can see a couple different measuring points there. A division doing 50 million a month, it's about $500,000 a year in potential cost savings. Now, again, this assumes every loan officer is shaving that 8.2 basis points off existing concession usage. So it's not a perfect scenario, but it gives you an idea of what's possible in this whole scenario if you can drive adoption. And I would say for the individual loan originator, what often gets lost, I feel like in this business, is understanding the opportunity cost with every person you talk to from a lead conversion standpoint. And sometimes the pushback I'll get is, oh, this client's been with me forever. I don't need to put a TCA together. They're fine with my fee sheet. And I have two responses to that, which is one, you don't know what you don't know. You don't know when they're shopping you or when they walk into their branch and see a rate their bank branch and see a rate advertised. And number two, why wouldn't you just want to put your best foot forward anyway and create that differentiation experience? Because at the end of the day, you probably have thousands of dollars at risk in that lead conversion part of the conversation. And if you don't put your best foot forward and you lose 1 out of 10 of those, that's a lot of money that's getting left on the table.
Yeah, and that doesn't even take into consideration in today's world. If you're a mortgage advisor, you need to optimize every relationship for not only conversion, but client for life, referrals, 5-star reviews, and we've seen a trend. When you look at Social Survey, they do an annual study of about 28,000 loan officers, and they come up with their top 100 or top 200. A lot of those folks use Mortgage Coach, and the number one out of 20,000 plus loan officers has done thousands of total cost analysis. So it's improving customer satisfaction. It's improving profitability. It's improving conversion. And I am sure that if we really, peeled this back, you would be seeing more referrals from the clients that got the TCA. You would see more referrals from the realtors where their clients were getting TCA. So for all you loan officers, this is smoke. You may not be hit by the P&L of your branch, but there's fire here, and so delivering this advice-based experience. So why don't you walk through this particular scenario, and let's do a little bit of a mortgage strategy interview here.
You bet. And I just want to piggyback on what you just said there, Dave, is the loan originator may not be hit directly by the P&L of their branch, but I guarantee you that they are, because at the end of the day, the company has an ROI that's expected. The branch needs to realize a certain amount of profitability. And the more efficiently it's run, the better the rate sheet, the sharper the margins, and that impacts that frontline originator. So it's an indirect connection, but everything that every salesperson can do to drive efficiency and to save money it should trickle down. It really should. This TCA was one I did actually back in 2015. And the reason I picked it was it was just a great success story. And actually a client that, to go back to my earlier comment, I was convinced was not going to shop me. Okay. Done multiple loans. They loved working with me. Never saw it coming. Of course, I did a TCA out of the gate. And then they came back with a quote from an online lender. And one of the things I would encourage you guys to do is to be incredibly fearless and transparent when it comes to the information you're giving to your consumer, because they're smart enough to figure it out. And at the end of the day, if you're willing to, what I do is I tell my people, put that online lender quote on your TCA. If they come back to you after you've already quoted them, throw that quote right on the screen. And then what you're going to do is you're going to talk to your consumer around the value proposition that you've created, and you're going to quantify it. And I'm doing that in the savings over 60 months there to say, hey, Dave, I know we've had a chance to work together in the past, and I'm really hopeful that we have a chance to do so again. I know you got this quote from the online lender, and I wanted to show you what that looks like over time. The reality is that if you elect to go with them, it is going to save you around $2,800 over the next 5 years of your mortgage transaction. And what I'd like to ask you, if I can, just directly, is the advice that I've provided to you over the years worth $2,800 over the next 60 months to you? And then stop, because I can't tell you how many times they will come back and say, yes, it is. And your price comparison conversation is over. So be fearless, put it on this, because if it's 10 grand and they say, you know what, I love you, but I just can't pay 10 grand. Now you quit sinking investment and time into a transaction that you're never going to get anyway. And if there is an opportunity to need a pricing exception to get closer, don't assume you have to match. You have a value proposition, and there is a dollar amount that gets attached to that. So oftentimes with my team, I'm like, upsell an eighth in rate. How about $1,000 of additional closing costs? Let's find a sweet spot if we're competing against an online lender or a bank where we can quantify our value to the consumer and get them to say yes to it.
Love it. And so I want to just highlight a few things. So think about this. If you're a loan officer, if you're a branch manager, every single person you run a credit report, you're spending time and money. You're spending your own time and money. You're spending your organization's time and money. You're doing disclosures. You're spending a lot of money. Let's make sure we deliver the best customer experience. And if you're a referral-based local loan officer, let's put your picture on it. Let's make sure it's personally branded. Let's make sure it's got your logo. Let's make sure it's the best experience that we can put forth. That is the only way you are going to optimize your success in the future. And while, I spoke early on, hey, you're a loan officer, the P&L doesn't directly impact you. But here's the deal. The best companies going forward are going to be the best companies that work together as a team. Just like in sports, the team with the most all-stars doesn't usually beat the team, doesn't ever beat the team that works best as a team. When the U.S. Olympic team won the Olympics, they didn't win because they had the most experienced, best skaters on the ice. They won because they played like a team better than anyone's ever played before. So just everybody in this business right now, it's time to be a great team, be a great branch, and at the end of the day, deliver the best possible customer experience we can. And that is the way we win. Hey, so anything else you want to call out in this particular TCA before I stop sharing it?
No, I will say though that if the best I ever got, the greatest value I ever created, I had one person sign off on $6,500 spread over 5 years, and that's the going record. So if anybody can beat that record, I would love to hear that story, because I'm always curious what that high watermark can be.
Yeah, well, what you created tangible value. Yeah. I just want to remind folks, you can look at this in a different view so that you can scroll through it and educate the family. Remember, it's a shareable experience so that all the stakeholders are involved, husband and wife. If it's a purchase, father-in-law who's loaning the down payment, everybody gets the link. So let's talk about a few other just management and leadership things, because I think most loan officers who look at this, and most branch managers are like, yes, I want all my people to do it. Even loan officers are like, I want to do this, but they need leadership, they need help. When I interviewed Dave Gallegos, he talked about when people come to him with the price exception, he's like, hey, let me see the TCA that you did. Let's get into some more practical, soft leadership skills that are just day-to-day scenarios. What do you do, and how do you have success with getting more of your loan officers to adopt this better way of doing things?
Well, that's a great one right there. Is if you're coming in for a big pricing concession, where's the TCA? And if there isn't a TCA, look, we get it. Every deal is mission critical right now. But what I'm going to do is then push back and say, hey, I got you this time, but the next time around, you got to bring me the TCA in order for us to go to bat for you again. So that's one thing. Another one is all my people know when they have a win through using Mortgage Coach, I want them to funnel it back to me. I want a copy of the TCA, and I'm going to champion it out to the rest of the field to educate and inform them around how their peers are winning business by using the TCA. So everybody knows, hey, if you get one and you win a deal and you're more expensive, you got to send that to me so I can champion that with everybody else. And that's been a big success, because it's one thing for me to say it. I feel like sometimes people think I've always got an agenda. At the end of the day, their peers, it's going to resonate more when it's their peer group saying, hey, this is working for me. So I think a lot of times, I challenge my people, not just in this context, but what have you got up here in your head that you could get out and help add value to someone else? We do a really good job of solving problems in the moment. We don't do a very good job of making sure then that we try to create a system or a process to prevent the problem next time. So I'm really trying to push that communication, best practices, let's share our victories, and we've had some great success with that.
So something else I want you guys to think about, and I've interviewed enough top producers and managers to know that it's a similar playbook. Let's do a really good job of socializing success stories. And, I would just tell any manager that's watching this, be thoughtful about how you forward the email, clean it up a little bit. So it's easy to skim and read, because loan officers are ADD, let the story jump out, frame it. But sharing success stories is just so powerful like that. There's no doubt every manager that has a great branch that's highly profitable and uses Mortgage Coach, they have that conversation like, hey, we'll let you go this time, next time. And they are also like, if they need to build the why with that loan officer, build the why, connect it to them. Here's what I also recommend is really start dollarizing this. Like, one of the things I loved about this success story is you really dollarize this for yourself. Like, what 9 basis points is worth to you. You know what it's worth to your branches. And I know that next year, when we do this same conversation again, you got your branch managers like, this is what it means to my branch. Yeah. And so it's like every loan that closes that didn't have a total cost analysis, average it up. It's going to cost you 9 basis points. So start, doing your own math. Like, my ask to every branch manager watching this, whether you're a P&L model, whatever your model is, quantify what is the value of a total cost analysis, and then operate accordingly. I think you'll get better adoption for yourself, and you'll get it for your managers.
And Dave, on that note, real quick too, I'll tell you,
Yeah.
I'm really transparent with my team. They know how we operate. They know to the 100th of a basis point what our overall division concession usage is. They know I've got it in their margins, and they know if they compress it, I'll reduce their margins, period. That's the deal. So everybody has a vested interest to work together to get us sharper, to get us better, because it's going to win in the rate sheet. And so I really feel that openness and transparency around that with your team, if you're in a leadership role, is powerful because it makes them owners of the outcome.
Yeah, and here's the thing, guys. When you look at the power of advice, at the end of the day, as mortgage professionals, if we really show up well, yeah, we're going to close loans fast. Yes, we're going to have competitive rates. But the big value prop is getting families into home ownership and picking great mortgage strategies and then managing that mortgage over time. You know, that could be worth hundreds of thousands of dollars. You know, I mean, prepaying your mortgage by $100 to $200 a month, you know, doing that over the course of a lifetime could be becoming debt-free 10 years faster, saving hundreds of thousands of dollars. So what's in the best interest, what's even more valuable than price, is advice. I'm doing an interview this Friday with a loan officer out of the Bay Area who gives all of his families PCAs. He had a family who came in to meet him. They didn't even think they could qualify. And he ended up showing them through advice how to buy a fourplex and how to, you know, cash flow it to where this family is going to be buying a piece of real estate, cash flowing it because he showed them how to creatively qualify for a loan they couldn't have otherwise done. And then he's using the total cost analysis to show the wealth that they're going to create. He's in a market where Redfin is like killing it. I mean, they're a huge competitive market. You know, he's in the Bay Area where it couldn't be more competitive, but he's showing a family how to build wealth with real estate in a way that's creating hundreds of thousands of dollars in wealth. So if you're referral-based, local, lender, hopefully you got some value from this. Give us a like down below. Share this with mortgage friends that want to run profitable, productive, sustainable lending platforms. Jason, any last words of wisdom before we wrap this up?
I think that's it, man. I'm happy to be able to share some of these ideas, and I hope the group gets some value from it.
And remember, there is more gold down below. A couple more interviews, a link to this total cost analysis. Like if you want to click around and look at it in more detail, link down below in the YouTube channel. Take care. Hopefully you got value. If you are a branch manager and you're killing it with a mortgage coach, I want to do more leadership conversations like this because this is what the industry needs right now. So reach out to me. Take care, y'all. Thanks again, Jason.
Thanks, Dave.